Meanwhile, Zimbabwe's headline in consumer inflation slowing to 2.76% year-on-year in March. That's from 2.98% in February on a month-on-month basis. CPI also breaking to 0.21%. That's from 0.95%. For breakdown of the numbers, James Waddy, Group Economist at Bank ABC, joining us on the line from Harare. James, thanks for joining us. So let's start off on the inflation figure there. I mean, inflation is certainly under control in Zimbabwe now, but break down your view on the outlook for inflation, given the fact that it has pulled back for the month of March.
Yes, actually, the decline took the market by surprise. As you may be aware, it seems like there's no clear-cut trend in terms of inflation profile at the present moment. Expectations were that possibly we would see a surge in inflation this month, simply because this comes at the backdrop of an upward adjustment in terms of duty on fuel, which was effected around the 10th of March last month. So this decline in inflation is really a surprise. Possibly it's underpinned by the weak demand. As you know, income levels generally have been static for a number of months now, with other companies as well reportedly in arrears in terms of paying salaries. So I think that again is feeding into a weak demand and possibly, translating into, positive inflation numbers.
What about the currency effect? Because we know the rand has been certainly weak, and you've got the multi-currency, economy right now with the rand and dollar being those two currencies. But how has the weaker currency over the period of March impacted, I suppose, imports from South Africa, given we're a key trading partner?
Yes, I think the currency effect could have attributed to the decline as well. When I looked at the U.S. rand exchange rate, generally it seems like the rand depreciated by at least 4.5% during the month of March. So I think that is what attributed to the disinflationary process as the imported prices become cheaper in US dollar terms.
Mm-hmm. What do you think from a monetary policy perspective right now can be done to help on the demand side of the economy, given the fact that you're seeing inflation, you say, coming back as a result of slowing demand in the local economy?
I think going forward from the monetary perspective, this would be good for the economy generally. But I think what is required now is the sort of measures that should, prop up the supply side of the economy. To me, that should sort of be the focus going forward, as the economy is kind of showing signs of slowing down. Mm-hmm. So maybe that should be where our focus should be in terms of propping up the supply side of the economy.
And talking about propping up the economy, we know that donors, of course, still play a very important part in the fiscus, and many saying, in fact, that the growth between 2009 and 2011 very much partly driven by the contribution of the donor community. South Africa extending a $100 million loan to Zimbabwe now. So talk to us about donor aid in the economy and the role that it's still playing in, I suppose, a slowing economy right now.
Yes, I think especially when the economy is showing signs of slowing down, it's important that the donor funding that is coming through to the fiscus would really assist the government, as it doesn't have the fiscal space at the present moment because of a lot of needs in terms of when you look at the what is lying ahead in terms of the funding requirements for elections and so on and so on. So the donor community definitely will play a critical role in terms of bridging that gap, and that would really assist, especially when we see that our revenues coming to the fiscus have flattened out over a couple of months.